Hi, welcome to the Market Alert for Friday, the 11th of November 2022. So a shocked Wall Street reacts to today's cooling CPI print. As I said in yesterday's Market Alert, if the numbers came out lower, and I expected them lower because they've been rising for goodness knows how many months, that the law of averages says that they're going to get 1 month where it drops, and that would create the pivot. That would also create a massive move to the upside, again, which I spoke about in yesterday's alert, and that's exactly what we saw. So cool CPI print sparks massive dovish repricing, i.e. the pivots. But the question is, of course, will it hold? Well, I think it will, and I'll show you why as we go into the alert. CPI misses sparks third biggest short squeeze ever. Stocks, bonds, gold soar as dollar crashes. And US stocks rocketed and yields dropped by the most since 2009 after softer than expected. That's complete and utter nonsense. History making a stock and bond bid after soft CPI. And this one, the market was stunned into action. Goldman trading desk on today's incredible squeeze factor unwind. Now let's just take a step back at the moment, shall we, and just have a look at the backdrop, the fundamentals of what's happening in the world. And if we have a look here, you'll see that we've got a war with Russia and Ukraine. We've got strikes, social unrest, and energy problems. We've also got inflation, and we've got record debt, 305 trillion globally, and the market went up. So let's have a look at the market, shall we, and see how it moved during yesterday. But just before we do that, I've just had a thought. Let's have a look at today's economic news first. So today we've got GDP for the UK. That's forecast to be slightly lower. Won't make any difference now that we've had yesterday's CPI. To be honest with you, none of this news will make any difference. Not even the prelim, even if it came out higher, will make any difference because the tone is set for the pivot and for the reduction in, not reduction in rates, but less severe. So instead of 3/4, they'll go with 0.5% or whatever. We know it's not over, but they're just using this now as the excuse to keep the markets moving back. And as I said earlier in the week, it was a brave statement on my part, but the markets are going back to the all-time highs, and we'll look at that again in more detail in just a moment too. So let's kick off, have a look at the Dow's reaction to yesterday's CPI numbers, which, before we go, came out at 7.7 from 8.2. I mean, it's just pathetic is the only word, but we know all prices are continuing to rise. They may stabilize a bit, but we know this is complete BS, and it's going to continue to move higher. Crude oil's up as well. But there you go. That's what it is. And the market's taking advantage of this. So let's have a look at the Dow for yesterday. So yesterday we see a monster move in the Dow to the upside. Let's have a look at these numbers in a bit more detail. From the low to where we're currently trading overnight, we're now up 5,000 points on the Dow. This is absolutely massive. This has been going on since the 13th of October. Since then, the market 5,156 points and heading back to the level seen here, which is, let me just draw this in down to here. We're through the 89 now to this point here, so we've got to move over to the weekly chart. Weekly chart, you can see that we're back to, or heading back towards this high here at 78, which is 34,207. Then we've got 89 here, but getting back to the all-time high won't take a lot of doing when you consider how many points have already been put on. Again, let's just have a look, see how many points we've got up to the all-time high from here up to here. We've only got 3,000. So there you go. We've already put 5,000 on. There's only 3,000 to go to the all-time high. Over the next few weeks or so, it won't be a problem at all to get back to that all-time high. That is, if it is the all-time high. I may have the wrong one there. Let's just double check this. That was the weekly chart. I might have missed the all-time high there. Let's have a look. And up to the all-time high. This is just ballpark. Yeah, it is 3,000. I thought it was. So yeah, 3,000 points for the Dow. Not going to be a problem, is it? We've already done 5,100 points. So why can't we do the other 3,000? We know it's nonsense. As I said, based on the fundamentals and the background of the world, what's going on, the debt, the poverty, all the rest of it, it's irrelevant when it comes to the markets. We've seen this for the last 14 years. We've also got QT as well, and that's making no difference either. It's just a matter of seizing the opportunity and getting the markets back to those all-time highs. Bankers' bonuses in January may be different then, but I very much doubt it, because unless something major happens, I mean, we've got all of those fundamentals that are bad news. Unless there is something major, then the market is going to continue to keep moving to the upside. There's nothing at this moment. Everything is being ignored, and until some black swan event or something comes along that stops it, it's going to continue, just as it did from 2009 all the way through to the COVID pandemic, where it had a major sell-off in 2020, and then recovered and went on to create more highs, which you can see there. There's COVID, and then we created more highs. There's the war, all of the inflation and everything else, and what we're doing, we're going back to the all-time highs. 30-minute Dow yesterday, again you can see the market moving up, and this one bar alone was 864 points when the news was released. In 30 minutes the market went up 864 points, and then continued for the rest of the afternoon from the next bar onwards, when the market opened, all the way up to the close of another 561 points. So there you go. Massive day for the Dow. In fact, let's just have a quick calculation on yesterday's move. Yeah, 1,308 points in one day. Absolutely insane on the upside. But as you can see, it's still going up now. We're above the high, and the market is going to continue moving to the upside as well. In the German DAX, well, let's kick off with the monthly chart. Again, you can see the market moving to the upside. It's not as strong as the Dow in the sense that it's put as many points on. But if we look over the last 2 months, we're up over 1,500 points now in this market. We've got from where we are now to the all-time high in the DAX, another 2,000 points. So again, it's possible. There's very strong at the moment as far as the DAX is concerned. Despite yesterday, the Dow only just sailed through 150 points through its previous day's high. The DAX had already moved up 500 points, which we'll look at now. There's the daily chart, so you can see the big move coming off the 200 straight up. And then in the 30-minute chart, again, let's just have a look, see how big the move was with the news. And it was 414 points, an insane number there. But again, like I say, you can expect this to continue. We're just coming off the high now on the overnight, and in the weekly chart, let's just draw in from here down to here. You'll see that we're already going to go to 14,400, and then we've got this resistance to the left there as well. Now we are going to get days where we get the market moving lower and doing straight reversals as well. But at the moment, the momentum is definitely on the upside. Let's just have a look at the 5-minute chart and the market's reaction to yesterday. And you'll see that, again, you've got that huge spike to the upside in the 5-minute chart. It wasn't doing a lot, and then all of a sudden the news came out. And there you go, 390 points in 5 minutes. Just a huge move, and overnight the market's filled the gap and is continuing to move there. You would have watched the high in the 50 EMA in the 5-minute chart. It's an area where the market is likely to bounce and then continue to move to the upside. In the weekly chart, the 89 and this one here, so which is 14,713. Won't necessarily do that today because that's a massive move, and there isn't any news like yesterday's news. So yeah, we'll just have to wait and see. Or it could catch us all out, and they could bring the market back a few hundred points as well. And that's why it's important to trade what you see, but also keep in mind the bigger picture of the weekly chart, the monthly chart, the daily chart. And if you get any short moves, then make sure you take the profits on the downside, because the market soon seems to find some support and then move higher. They're going to dine out on this CPI number for a few days, let's put it that way. In the S&P, big move for this yesterday, going straight through the 78 and 89 that we drew in yesterday. And there you can see we even gapped. The news took the market by surprise. I wasn't surprised. Again, go back and listen to yesterday's alert as I talk about what I was expecting, given, I say, the law of averages, really. It wasn't anything scientific. They're going to, the market's already moving up. If they can get a number that's less than forecast on the CPI numbers, it takes the pressure off the Fed and they'll move the market up, and that's exactly what's happened. Market's through the high, sitting on there at the moment. In the FTSE, we've got the same market going through the 78, 200 MA, 5 MA, and trading up to 89 on the overnight already. The next upside target in this market, when it does it, is going to be 7514. Now, all it needs to do is to clear the 7425 in the 89% retracement area there. In the 30-minute chart, so you can see we put on 100 points straight off with the news. Market pulled back a good 89% and then moved and continued to the upside there. In the currencies, GBP, JPY down, which is odd given that the dollar moved lower, but sitting at the 50 EMA at the moment. Big move down there, as you can see, stuck at the 200 MA in the morning. Then the news, market started to bounce back and then sail down to the S2 overnight, but at the moment he's struggling with the DP and the 50 EMA. Meanwhile, in the pound, this is moved up strongly also, back to the resistance to the left, which is, just draw this in, it's going to be about 117.7374. And in the 30-minute pound, again, you'll see the massive move to the upside as the dollar moved to the downside during yesterday. That's a good, let's have a look, 265 pips there, high to low for the pound. Massive move, and then it's maintained it. It just needs to get through yesterday's high in order to continue to the upside. And in the US dollar, you can see it tanking yesterday down to support to the left. There are a lot of green lines there. The actual price of this bar is 107.40. That's where there's major support, so that's market has to hold at this level. If it doesn't, then we will go down and have a look at the low to the left, which also combined in with the 200 MA there. In the metals, another good day for silver through the 200 MA. First time in a very long time that silver's managed to get above here. And there you can see the reaction to yesterday and overnight as well. We're currently at yesterday's high for silver, and gold also piling on the points yesterday. And the 30-minute chart, again, you can see a massive move, and overnight just trying to get back above that high of yesterday. So there we go. A lot happening. None of it makes any sense unless you look at it from the perspective that you just ignore everything and the bankers will move it up because it's bonus season, and they'll just wait until they've had the bonuses, and then maybe we'll see something happen in January, which we did in 2018. If I recall, we had a massive move down after they'd moved the market up massively from October through to December. Okay, that's it for this one. Have a great weekend. Let's see what the UK GDP figures are. Not that they'll make a fat lot of difference unless they come out less than forecast, and that'll send the markets up. Come out better than forecast. They'll interpret that as good news because inflation's dropping off, so it doesn't matter now if the GDP numbers are higher. There you go. Okay, that's it from the Mad World Series 1, Episode 1. I will see you on Monday, and as ever, thanks for watching. See you in the next one.